a seat, sip some wisdom, and stay a while. This is the Prosperity Lounge, where growth gets personal. Step inside, we're breaking chains.
Welcome back to the Prosperity Lounge, where hope meets freedom and growth gets personal. The show where we blend money, mindset, purpose, and the people who make our communities shine. I'm your host, Joey Ruffalo, and before we dive in, a huge thank you to tonight's sponsors. If you're watching on YouTube, you get the pleasure of seeing all the QR codes go up on the screen. First, we got Bello Business Solutions. Bello Business Solutions. Mention Make Business Make Sense for a free consultation. They're helping entrepreneurs grow with clarity, systems, and real strategy. And Lapera Insurance. Call 865-252-0480. That's 865-252-0480. Email Joe Lapera at jlapera, that's JLAPERA, at farmersagent.com. Use promo code JRRadio, and first 10 quotes this month get a free gift card. Joe's actually in studio tonight, so don't make me look bad.
Guy.
Don't make me look bad. He's helped protecting families and small businesses with personalized, community-centered coverage. We appreciate their partnership and their support of this mission. And remember, Wednesday nights, 6 o'clock on YouTube, we also have some live chats going on. It's fun to be in there and kind of converse with us and see what's going on from the videos from around the country and around the world. We've been talking to some people that are just worldwide. We have a couple of interviews from Australia coming up, some Denmark, some people that are doing some fantastic and amazing things. You don't want to miss it. And if you do miss it, you can always listen to the podcast at theprosperitylounge.com/podcast. Or you can go to theprosperityloungepodcast.com. I forgot I had that URL as well. Theprosperityloungepodcast.com, or just on Apple or Spotify, iHeart, Amazon, Pandora, Stitcher, wherever. If it's a podcast app, you can find it there. That's where I would say to go. And of course, Fridays we're here live from 6 to 7. Dare I do it? 6, 7 on the radio. Joe's already.
It's never going to die.
Joe's already ready to get up and leave. I apologize.
I'm out.
Speaking of Fridays, next Friday is a big one. Circle the calendars, mark it down. If you only listen to one other show of the year of mine, which I hope you listen to them all, but if you listen to one other show besides this one tonight, next week is the one. If you've been wondering if you were on the nice list or the naughty list, getting what's on your list or a lump of coal, well, you have one last chance to find out, as Santa will be here live in studio to answer all your questions. We'll have a special number to give out next week live. We'll have the YouTube chat going on. You can actually go right now to theprosperitylounge.com/Santa show, and you could submit a question for Santa, and we'll read it live on the air. It's got to be appropriate, though. Don't send Santa some crazy questions. If you also go to that website, what's really cool is all proceeds from that show are going to go benefit East Tennessee Children's Hospital. We'll have a representative here in studio with Santa, talk about East Tennessee Children's Hospital. There's some great opportunities to sponsor that show. And like I said, all sponsorships from that show are going to East Tennessee Children's Hospital. So it's a special show, special opportunity for you and your business to get involved. Again, www.theprosperitylounge.com/Santa show. Check out the sponsors. Anyone can donate. We already have a great, wonderful sponsor step up in addition to our awesome partners, Bello Business Solutions and Lapera Insurance. Simply Magical Vacations by Amy. If you don't know Simply Magical Vacations by Amy, then you haven't been to any networking meetings anywhere around Knoxville in the last, I don't know how many months or years. Very active all over the place, active with the chamber. She's a really awesome lady. She has stepped up to be our title sponsor. So make sure you're subscribed, set those alarms and notifications, because you don't want to miss Simply Magical Vacations by Amy presents the Prosperity Lounge Santa Show next week, December 12th at 6 o'clock live on YouTube and on 96.3 FM. Now, let me open with a question that's going to make every one of us think. If something happened tonight, a wreck, fire, medical emergency, do you even actually know what your insurance would do for you? Or would you be learning in the middle of the crisis? A recent survey found that 54% of Americans don't understand what their insurance covers, and 72% don't know their deductible. Even more surprising, about 4 out of 10 households have zero life insurance. Man, that's crazy.
That's a scary one.
Yeah. So insurance touches everybody. It's every part of our financial lives. Most people don't understand it. And tonight we're going to fix that. So I have with me tonight, calling this the Insurance Playbook. Joining me tonight is a trusted friend of the lounge, a prosperity partner, Joe Lapera, founder of Lapera Insurance. Joe, thanks for pulling up a chair. Welcome to the Prosperity Lounge.
Thanks for having me, Joey. This is a pleasure.
I'm excited to talk to you because there's a lot of stuff going on. The chat is way going on here. It's a lot to take in. I think we have some friends of ours in the chat. I see Carol here. Hey, Carol.
Hello, Carol.
Nice to see you. We got a fan of PL, who's a fan of the Prosperity Lounge. We got Emmy Joe's in the chat. We got Soul Bice Drunk. We got all the regular people here. So it's awesome. Thank you guys for being here to learn all about insurance. So Joe, before we jump into all the technical stuff, let's share a little bit about your story. How did you get started in the insurance world?
You know, it's kind of a funny story. So, little background: I grew up in the restaurant business.
Mm-hmm.
So, my family ran a restaurant, and my mom decided to get into the insurance in the '90s. And I ran my dad's restaurant, and in the early 2000, we sold the restaurant. And she goes, "You know, Joe, why don't you come work for me, learn the insurance business, and then one day you can take over?" And I was like, "Absolutely not." I was like, "I only know family businesses. I got to go do something on my own." So I went into the corporate world and learned all about customer service, group benefits, the systems you need to provide good customer service. And then I was like, I don't want to work for somebody else. So I ended up starting an agency, and my mom is the best. So she was my mentor, helped me with my business. And then eventually I bought her business, and we keep going.
I love that. Now let me set the stage for the listeners. We already got questions coming in, but we're going to get to those in a little bit. But, before we talk policies and everything, we need to talk purpose. One of the things for insurance, basically, insurance exists I believe it exists for maybe one core reason, and that is to transfer risk away from you and onto the insurance company. Now, we're going to talk about some key terms to follow along here, so if you got a pen and paper, write them down, but you can always go back and listen to them.
As long as you're not driving.
As long as you're not driving. All right, because otherwise, you're going to file a claim. And
No claims.
No claims. All right, so some of the terms we're going to think about initially are risk transfer, premium, deductible, and liability. So let's break that down for the audience a little bit. Let's talk about risk transfer for a bit. So risk transfer, from the way I understand it, and I'm going to play the role of layman tonight. You don't carry the financial burden alone. You're paying a premium, and the insurance companies agreed to absorb that major cost for you of a covered event.
That is 100% correct.
Yes, so far, ding, ding, 1 point for me. Premium is the amount you pay monthly or yearly for your protection.
That is essentially, you can consider that as part of your risk. That's you pay that, and the insurance company, outside of your deductible, will pay the rest. So yes.
Yeah, perfect. Now, how all that's calculated, how all that's figured out on an annual basis, and state by
super
state.
complicated, believe it or not.
We don't even want to get into that because it'll take more than an hour. Deductible is the amount you must pay out of your pocket before the insurance kicks in.
Yep, that's 100% correct.
Oh, good. I'm 3 for 3. And liability, the amount of the insurance company will pay to others if you cause harm or damage.
In most cases, yeah. So
Okay.
if you're liable for something, that's the amount the insurance company will pay on your behalf. And they will also legally represent you.
Perfect. In your experience, Joe, why do families underestimate how desperately they need proper coverage?
I think it's a lack of understanding, and we now live in a world. Anyone who turns on the TV and waits about 10 minutes would probably see about 5 insurance commercials, and they all talk about saving you money, and that's great. I'm never against saving money, but we forget what insurance actually does, and we worry too much about the actual coverages themselves.
Sure, and I think a lot of times people are, like you're talking about the coverage part of it, there's a lot of people who maybe think they're covered, but there's a cost prohibited from covering themselves fully.
Yeah, that's the other thing. I mean, they'll say, "Oh, I have full coverage," so they assume they're just covered for everything when they don't fully understand that the bodily injury means something and 25/50 means something. It all serves a purpose, and if you don't do insurance on a regular basis, it's hard for for anyone to understand.
Yeah, I got that coming up in a bit, that whole 25, 50, 15 or whatever it is. Each state's a little different.
Tennessee's 25, 50, 25.
That's right. And we came from a state that was different, and then moving here, well, that's a good teaser. Most people think insurance is about fear, but we kind of teach people that it's about freedom, right? And when you're properly covered, you're free from financial devastation. You're protecting your house. You're protecting your assets. That's your tagline, right? Protecting your assets.
Yeah. Yep. Protecting it, or securing your tomorrow today.
Yep. I love that as well. It's awesome.
Yeah, I mean, peace of mind, right? I think that's the greatest feeling in the world, when you know that if anything happens, any catastrophe that could potentially happen, you've got protection in place.
It's one of those things that you, on a daily basis, don't think about, and then when you do think about it, you think you don't need it until you need it.
Exactly. Yep.
And then you're glad you have it.
100%. Or, unfortunately, a lot of times people are like, man, I wish I would have known this ahead of time.
Yeah. And there are a lot of the changes in a lot of the different categories of insurance over years. We're not going to get too much into health insurance, but previously health insurance would have something like pre-existing conditions weren't covered,
right?
And now pre-existing are covered. And if you got injured you broke your ankle, and you went to another company, they wouldn't cover your broken ankle,
right? Yep.
So you're kind of stuck there, staying with that same insurance company at the mercy of whatever rates they would raise it to and whatever else. So there's a little bit more freedom nowadays and the flexibility. So, yep. We'll make sure we're on here. Perfect. So let's break down a little bit of those 4 categories that most households interact with. We're talking about, so what I'll do is I'll set up some definitions, and you fill in the rest in real life applications. So I'll set up the pins, you knock them down.
I like it.
Perfect. Auto insurance.
So obviously that insurance is to cover your vehicle. A lot of people think, if I get in a wreck, $10,000, $15,000 worth of damage in my car, they repair the car and I move on, which is accurate. However, the people tend to forget that the more important cost is, if you're in an accident, there's a high likelihood someone's going to get injured. And, I think everybody knows medical costs are outrageous, and they're only getting worse. And your car insurance has to cover those medical expenses. Otherwise, you're facing potential legal activity. So if I were to rear-end you and you were to get injured, you're out of work for a while, what's that going to cost? What if you need a surgery? And if I don't have the right liability limits, I could be in a financial pickle real fast. And so it's the liability limits actually matter way more than thinking you have full coverage or what your deductible is, and a lot of people don't realize that. So all this, you'll find, really protects you financially. Your car is an asset, right? And so you want to repair that, but on the same side, you don't want to be sued. No. You don't want to have to pay for an attorney. Let the insurance company take care of that.
Yeah, it's one of those I think it's the most used and most misunderstood policy is probably your auto, because again, the different policy limits and what they all mean. So you said something earlier in Tennessee, it's 25, 50, 25. Okay. Yep. I gotta change my notes. I got that wrong. All right, 25, 50, 15. I'm off.
Well,
sorry.
Every state's a little bit different, and it changes. So
absolutely. So, but it's funny because the average car accident with injuries costs $61,000.
Yep.
So if at minimum coverage, with that $50,000 per accident part, you're not being able to cover the amount, so you're going to be out of pocket even more. Right.
Well, and let's break down those numbers of 25/50/ could be whatever, 20, 25, 15. So $25,000 per person. So if I injure someone in an accident, the maximum my insurance company will pay is $25,000. That's a visit to the hospital and a night over. You've already blown that out of the water.
Right.
The $50,000 is the maximum they'll pay for the accident. So if there's 2 people injured, the max they'll pay is, so if there's 3 people injured and they both, you're exhausting that real quick. And And then the 25,000, that's to cover the property damage. So that's repairing their car, those type of things. They're just, they're the state minimum. So the state says by law, this is the least amount you can do, but by no means does that mean it's enough.
Yeah.
Unfortunately, most people are driving around with that coverage.
I was working with a client one time, and they had just bought a new car, and they had the minimum coverage here, and their car value was worth more than the $50,000. So it was like, oh, you need to get a higher coverage.
Yeah.
Because if your car is damaged or totaled, you're not going to be covered.
Yep.
So that's one thing to look at too. Yeah, there's these minimum coverages, but is it really covering what you need to protect yourself? And it's not. And again, another client who got into a car accident about a year or so ago. They were pulling out of a parking lot, going across clear lane. Somebody was in a turn only lane but going straight. We have these weird turn only lanes here that I grew up with roundabouts and everything else. Here they're just these weird turn lanes that either you drive straight through, or people just decide they're to make it a fourth lane on the road, and it's not.
Yeah,
and they drove through that and hit the person in the front, and insurance luckily took over. There was a deductible for collision and all that stuff on their car, but they got a letter in the mail that they were being sued.
Yep, that'll happen.
Yeah, subjugation took over, and eventually, after months of postponing court dates, the other company decided that it wasn't worth it anymore, and they were fine. But
that's good.
It was months and months on edge of well,
and that's just it.
Show up.
Like if you have the right coverage, you don't have to worry about being sued.
Yeah,
because the insurance company will pay it, and they won't come after you personally.
Yeah.
So
from what I understood here in Tennessee, it was one of those things. They weren't being sued personally, but they had to go and be a part of the court case.
Yeah. Well, you said subrogation, so sounds like they were trying to get the other insurance company to pay.
Yeah, that's what they were doing. But it's still very scary when you get something like that in the mail. But if you have the proper coverage, you don't have to worry.
Yeah, just hand it off and let the insurance company take care of it.
I love that. That's what it's there for, to protect yourself. All right, next we got homeowners and renters insurance. So a couple of things you want to talk about here. There's two different types of concepts that people often confuse. There's actual cash value and replacement cost value. Let's start with actual cash value.
Yeah, so actual cash value basically means we're going to depreciate the asset. So if you have a 10-year-old couch, we're gonna say, well, it's to buy one new today is $1,000, but it's 10 years old, so we're gonna reduce it by X amount of money. In the home world, that means we're gonna give you what the value of the home is, not necessarily what it costs to replace it. And that's typically not going to be enough coverage, and so we usually recommend doing replacement costs. What replacement costs is we calculate what it costs to rebuild it like it was brand new. So you're getting enough money to truly replace your home in the event of a total loss. Okay,
so actual cash value is insurance is paying what the damaged item is worth today.
Basically depreciates it, yeah.
But for a home, it's whatever the home's market value is.
Right, or say it's not a total loss, right? And say it's, the siding. If you have actual cash value, there's a good chance. Every policy is a little bit different, so we're going to talk general terms. But if your siding needs to be replaced and it's old, they're not going to give you the full amount.
Right.
So replacement costs, they will.
Okay.
They'll pay what today's dollars are needed versus depreciating it.
Okay. And then replacement cost value would be if the home is totaled. Let's say we live, unluckily enough, a few years ago, we had a tornado that came through Knoxville. Homes were damaged, some were completely damaged.
Yep.
So let's take that for an example. Some people live in Florida or the coastal areas with hurricanes. Let's not think for a second about hurricane coverage and all these other things that are out there, but just
a little bit different.
A little bit different. This is strict. Home is completely totaled and gone.
Yep.
If you have actual cash value policy, they will pay you what your home probably was on the market for, or what the
plus
underlying market value.
But they do factor the age in too. So
okay.
And then you'll have a different coverage item for the personal property in that they'll treat them completely separate. But yeah, it'll be depreciated. You usually will not get enough to replace that home. Even if you buy a house somewhere else, you're probably not going to have enough to replace it unless the values of the homes in the area have gone down or something like that.
Okay. So, and then replacement cost value in that same situation, if I had a replacement cost value of coverage, it would be here's the money to build it exactly like it was.
Exactly, but new.
Okay. But new. Okay. So I've run into situations where people, especially when you live in a market where home values shoot up a lot, but people don't go back and adjust their coverage. So if something happens to them,
It can be an issue.
fully covered.
Yeah.
That actual cost value.
So thankfully, a lot of insurance companies have like an inflation. So each year that you'll see your replacement costs go up. It's part, if your premium went up a little bit, you'll see that your dwelling, that's the coverage line item to rebuild your home. So there is some coverage there. However, there are times where the area skyrockets in cost. Like if a tornado comes through, to build things is going to go up instantly because the supplies are immediately going to reduce. So there's coverages you can get, like extended replacement costs, guaranteed replacement costs. I'm sure we won't go into full detail on that.
Sure.
But what I will tell you is if you have mass destruction and builders come in, they're going to go find the people that have the better policies with the higher coverages, and they're going to go take those first. So you make yourself more... like you have a higher likelihood of getting taken care of quicker if you have good coverage. Yeah, exactly. More attractive is a good word.
Yeah. You need to be attractive on paper, not just attractive in person like I am, so like Joe is. So it doesn't work. Our charm doesn't work all the time as much as we want it to. So that's interesting because I know there's some people who, they buy a policy maybe 10 years ago, and the inflation's in there, but you have situations, let's say in East Tennessee here, where the average home value, let's say prior to 2020, was very low, and now it's very high. And people may not have gone back, especially people who have been in their homes for a while, may not have gone back and looked at their limits or their coverage amounts. And that's something that needs to probably be adjusted annually, kind of look at it and kind of fix it and stuff.
So, and another thing that happens is we all make improvements to our houses, right? Like you said, a 10-year-old house, I'm sure they've made some kind of changes to it. And if you haven't updated your insurance policy, that's where you can really create a gap in coverage, because the value does matter, but rebuilding costs is supposed to take the value out a little bit. I like to take the analogy of if I build a house and I put it, exact same house, I put it on the water, and I take the exact same house and I put it next to this radio station. Nothing wrong with this radio station, but it's just not on the water. The one on the water is going to be valued a lot higher, right?
Right.
However, to rebuild it is about the same cost. So, but you have to factor the changes in over the years, and so it's good to do those reviews on a regular basis.
Yeah, it's something I recommend as part of the annual review process when going over people's financial plans anyway, is look at the insurance coverages and make sure we're good to go. Now, I'm going to skip number 3 for a second and get into number 4 on my list, which is health and supplemental coverage. And we're not going to touch too much on that, but even though we are both registered, licensed health producers here in the state of Tennessee, we don't really want to get into that too much because it's open enrollment season. So if you are needing to get coverage, make sure that you do it now. But medical debt is the number one cause of bankruptcy in America. And a couple of the key terms I just want people to understand is, deductible, obviously, again, is what you pay before the insurance pays. So look at some of that stuff there. Your out-of-pocket maximum, that's the most you'll pay in a year before insurance. It covers 100%.
And keep that in mind if you have things you want to get checked out of procedures. If you are close or you hit your out-of-pocket, don't put off that whatever, knee surgery, whatever. That year might be the year to get it done.
Yeah, I remember when my wife a few years ago had a major surgery. For us, she ended up having it in March. So all of her subsequent testing and follow-ups and scans were all covered because the surgery itself hit her out-of-pocket max. So that was great. Now, this year we're looking at it like, you got a scan. Oh, it's going to cost how much? Didn't it used to be free? I said, no, it was free because we had our out-of-pocket max, and not necessarily free, but we didn't have to pay for it because we had our max.
I have a story on that too. So my youngest daughter in 2017 was born, and I was having a knee issue, and I told the wife, and it was 2 weeks before she was born. I said, you know what? Next year when things calm down, I think I'm going to get my knee checked out. I'm pretty sure I need a knee surgery. No, you're doing it now. I'm like, we're having a baby in 2 weeks. She's like, we hit our out-of-pocket max, and you have to do it now. So a few weeks after she was born, I had a knee surgery and couldn't walk for 12 weeks. And we had a newborn, and my wife, being awesome,
take care of you both.
Took the brunt. Yeah, for sure. So,
and the other thing is co-insurance, and that's basically where it's a split between you and the insurer. Sometimes you'll see things like 80-20, 70-30. The more risk that you end up taking on, let's say that 70-30 policy is going to be cheaper than that 80-20 policy because you're paying more out of pocket to cover things. But it's all part of your overall plan there. And then there's other things like supplemental things like accident and cancer plans and some other things that get involved and all that. But talk to your agent, talk to your trusted person there to figure all that out. But I want to get into something about life insurance, and I know that's a big component for you in your line of work.
Yep.
I'm also a life producer, but don't do anything with it, Joe. It allows me to talk about it. How about that?
There you go.
48% of U.S. adults say they need more life insurance, and 1 in 3 households would face a financial hardship in 30 days without it. Now, there's two main terms, two main types. I'll throw it that way. I was getting ahead of myself. Term and whole life or permanent.
Yep.
And there's variations of things under universal whole life and this, that, and everything else.
Right.
So term, for people listening and watching, term is you have insurance for a set amount of time, a certain amount for a set amount of time. If something happens in that set amount of time, you get X. You have $100,000 coverage for 10 years. You're covered for that for 10 years. You pass away in that 10 years, your beneficiaries get that amount.
Tax-free.
Tax-free. It's very affordable. It's pure protection. It's probably the cheapest form of insurance. You can buy $1 million coverage for a couple bucks a month.
Yep.
Now, you won't see any of it.
That's another statistic. A lot of people believe life insurance is far more expensive than it really is.
Yeah.
It's usually less expensive to insure yourself than your own car. Like if you do it early enough, it's extremely inexpensive.
Yeah. The other one is whole life or permanent life, and that can cost more compared to term. You usually get less amount, but you're covered for your entire life. And it's usually used for estate planning, tax strategies, legacy planning. I want to break down a little bit the difference between the two and what makes sense. Obviously, it's going to be, and I'm going to throw this caveat out there, what makes sense for you personally in your plan is what makes sense. So I can sit here and spout term life is 100% better than whole all day, but in your situation, if you come to me and we sit down, man, maybe whole life is better depending on what you're going to use it
Definitely
for.
case by case for sure.
Yeah. So we've seen things where sometimes we'll tell people to price out the difference. So let's say $100,000 policy, whole life policy is going to cost you $200 a month. I'm just making it up. It's probably just making it up for the purpose of this conversation. And I go say, hey, term, you might be able to get $500,000 for $100 a month, but that term's going to end in 20 years. Well, what I suggest people do, and this is a strategy, is you take that $200 that you earmarked for insurance, you buy your term for $100, you invest the other $100. By the time your term expires, you have a nice little investment account that you're self-insured with.
Yeah.
Kind of come through that.
That's one way to do it. Another way, there's no reason you can't have both. So a lot of times what we'll recommend, again, it's case by case. There's so many things that factor in. But when you're young, especially if you have children, you should do it for your children, is get them a permanent life policy. Most of them, or if not actually all of them, will build cash value. Some of them have flexible payments to where you can put more in, so it acts like an investment plan, plus they have life insurance, and it's extremely inexpensive the younger you are. So I recommend perm insurance early on, as early as possible. It becomes an emergency fund. It can do a lot of benefits. We won't get into all the details. Then when you get older and you get married, you buy a house, you have children, your liabilities or your responsibilities are far more than when you were a 20-year-old or whatever, right? So that's the time to get term insurance. So that you can make sure your kids have a roof over their head if something happens, make sure that mortgage gets taken care of. So a lot of times I recommend doing a combination of the two. And I'll give a quick real-life story. In fact, full disclosure, I was a couple minutes late. Joey was totally cool about it, so thank you. The reason I was late, and this literally happened as my last call before I left, is a mom called me who took out a permanent policy on her son. Well, that son's now an adult, and he got in a really bad accident, and he basically is going to be in a hospital for several weeks, and he's not going to be able to work for months.
Wow.
So he's got a mortgage, he's got all these things, and she's like, we're just trying to find any kind of money, and he had cash value in that life policy. So we're actually going to pull that cash value out. We're going to do it as what's called a loan, but you're going to pay it back to yourself. So you're not actually paying a bank or a lien holder or anything. You're going to pay it back to yourself. It's tax-free. And now he's going to have this chunk of money that he can help pay his mortgage and take care of these things. So that's another benefit of permanent insurance. But you got to do it young enough, and and then you always, as you get older, term insurance is a great thing to add to it.
Yeah, one of those things with term, when you're thinking about the amount of term, let's say you have kids at home that are 6. Do you want a 10-year term? So if something happens in that 10 years, they're only going to be 16.
Right.
You might want to look at a 20-year term. That's going to take the kids till they're 26. So if something happens, at least college is paid for. Maybe their stuff is set up. There's things that you can plan. If it's just you and your wife, maybe you get a smaller coverage term, or you think about different policies. But you really want to make sure that you're planning correctly. Not everybody needs a 30-year level term, price $1 million coverage.
Right. Yeah, it depends on your needs.
Situation. Yeah.
And if you go to a qualified professional, an agent, they have all the tools. They can identify exactly how much you should have. They should be able to tell you a range of what it'll cost and be able to set it up. And what the great thing is, so I've been doing this for 18 years, and the process to get life insurance in the beginning was like weeks on end and paper thing. It took me an hour just to get through the application. I hated it, quite honestly. Now, 84% of the people that I do a quote for get approved, or we get a decision within like an hour.
Wow.
And no medicals, none of that stuff. So that excuse, like I don't have time for medicals and all that stuff's gone now. Almost every company has a what they call an accelerated underwriting process. It's never been easier, and it's actually, and today, as long as you're healthy, this is the least expensive life insurance will ever be, because it's driven by your health and your age. So every time you get older, it only gets more expensive. So there's no reason to wait to get life insurance.
And I believe there's a term coverage now that there's convertible term.
Yeah.
So you can get term, and at the term ends, you can either stop paying or you can convert it into a whole life policy.
Exactly. Yep. And then there's another term policy, which is kind of great. It costs a little bit more, but after 20 years or 30 years, they'll give you the majority of your premium back. So you get this nice chunk of money at the end of it, and then you can pocket it, or maybe use that to overfund a permanent policy.
One of the things you mentioned earlier was with your client situation was pulling the money out, cash value as a loan. Now, one thing to remember out there in radio and YouTube land is you can pull it out, you can pay it back.
Yep.
It's fine. Let's say you have $100,000 coverage and you pulled out $40,000 cash value, and something happened to you tomorrow. Well, the insurance they're not going to send you a check for $100,000. They're going to send you a check for $60,000.
Right.
So just remember that. So if you don't pay it back, they already pre-gave you the money. So a lot of times I've seen that happen where people have taken the loan out, didn't pay it back, and then something happened to their loved one. They're like, wait, we're supposed to be this, and it's not, because they forgot they took the loan out or they spent it on something else.
Right.
So just be mindful when you have that coming on, and you use that.
And ask those questions.
Yeah, for sure. That if your agent's not willing to answer your question, get a new agent.
Yeah, that's the problem. That's the only reason we're there, is to be the expert. None of us can be the expert of everything. So we're here to be that expert.
Now, there's one other policy that falls within the universal, and you might have touched on it a little bit. I think it's a...
Talking about the IUL?
Yeah.
Index Universal Life?
Index Universal Life, because I've seen a lot of people today calling it, you're kind of acting like your own bank.
Yeah.
Which is a fantastic thought process if you can wrap your head around it, make it work.
I don't think we'll get into all the details, but it's actually my favorite policy. So Index Universal Life, for those who might not know, so in the index, that people have probably heard of the S&P 500. It's the 500 best stocks in the market, in the U.S. Market, and this basically mirrors that. So a portion of your money will go to pay the life insurance. The rest will go into an account that takes on the returns of the S&P 500. And there's other index stuff. I'm trying to keep this simple. So say the S&P 500 goes up 20%, you'll get a chunk of that. You probably won't get all of it. Maybe 12.5%, I think, is what it is right now. But, and this is going to happen soon, in the next couple of years, the S&P 500 is going to have a horrible year, maybe down 20%. You will not lose a cent of your cash. And so then when the markets go back up again, you're going to be starting at zero, where everybody else who's in the actual stock market will be starting negative 20. So it actually outperforms a regular S&P 500 index over the last 20 years. It's actually done better. So you not only are you getting life insurance, but you've also have another avenue to pour in cash that you can actually take out tax-free. There's a bunch of methods in how to do that. That's that be your own banker part.
Right.
So it's amazing. It takes time to build it up, though. It doesn't happen overnight. And you want to overfund an index universal life. You never want to pay the minimum. Otherwise, it won't work.
Absolutely. All right, so I want to move on a little bit to, we had some questions in the chat about other types of insurance, like pet insurance. Do you deal with pet insurance?
Yeah, we do. We don't do a lot of it, but yeah, we have a pet insurance option. That's becoming more and more popular now too.
Yeah.
But it's the same thing for humans, right? Like our dogs, we love them. They're our family. Cats too, but I'm a dog person. They're like family to us, and we want to make sure they're taken care of. And when things happen, it can be expensive, and that pet insurance can help with it. My wife and I paid like $5,000 for a dear beloved lab who ended up passing away like 8 months later, but we do it all over again.
Remember when my cat was sick, I just kept whipping out that credit card at that UT Vet Medical Center.
Yep.
Just whipping it out. And I realized, yeah, that was, anyway, you don't think about it at the time because you just want to, anyway.
Conversation for another day.
Yeah, there's another kind of coverage that you specialize in. We've talked about this in our networking group, is the surety
Yeah.
bond coverage. Tell our audience a little bit about that.
Yeah, so surety bonds, they play a lot of different roles. If you're a business owner, like a contractor, you've probably been required to have like a $10,000 contracting bond. What a bond is you're paying a insurance company a much smaller amount than the $10,000, and if something were to happen, that surety company will pay that $10,000 to wherever. Where it's really needed, and if there's any attorneys out there, I can help you, is if you do anything with the state, if someone passes away and you got to handle the state, most courts require a probate bond. And people that don't know where to go with them, it's kind of this niche kind of thing, and we have some really great options for that. And what we like to do is partner with the attorney, so the attorney can be like, hey, we'll get this taken care of for you, and we can really help out in that process. I've got several attorneys that just love that process, and that way they get to take care of their client. They know they're going to get the bond right away, because I think the worst thing is to tell your client, go do this, this, and this, and then, if they don't know what to do or where to go, they sit on it for weeks and months. We can help take care of that.
Now, is that one of those things that's a state-by-state basis, depending how they handle their...
Yeah, 100%. Yeah. Basically, a lot of times, if someone passes away, whatever their state is valued at, the courts will require 1.5 times that in a bond for the executor. So the executor obviously runs the estate, and I'm not an attorney or anything, so if I get any of this wrong, I apologize. It's a little out of my area, but from what I understand from my attorneys is the executor now controls the estate, right? And that estate could be worth $10,000 or $1 million. And so the court says you have to have a bond, so if you run away or mismanage the money, this bond will protect the estate and whoever the beneficiaries are of that estate.
That's interesting. Because we had a situation where we were dealing with that in another state, and that didn't come up.
Okay. Yeah, it's definitely going to be.
And I know Tennessee's pretty heavy in the trust aspect, so maybe it's something to do with that too, or what some of the states you handle stuff in.
Illinois is huge.
Illinois,
We do a lot of those probate bonds in Illinois.
So that situation's coming up, or you need that situation, definitely reach out to Joe. He'll definitely take care of you. Be one of the first 10, get a gift card.
There you go.
Get a quote. All right, let's talk about some issues here that people only find out after a claim is denied. And that's going to be one of those things that happens a lot for people. Claims are denied, especially in the health insurance world, which we're not going to get into too much, but claims get denied in appeal. We deal with that all the time in my wife's situation. She has to get 2 scans every 6 months. They always approve one and deny the other.
And then you got to fight it.
And they deny the letter. I'm going to throw her business out there, but the letter comes back and says, we're denying your scan of your face, but we understand that you have an issue with your face, and we recognize there's an issue and it needs to be taken care of, but we're denying the scan to take care of it. And that's just the wording they kind of basically do.
That's crazy.
And then they got to appeal it, and then it's like, yes, it's approved. And this takes like
it feels unnecessary. It's got to cost the insurance company a bunch of money too. Like it doesn't seem efficient at all. We
always get those like 5 letters in the mail. It's the the denial, then the approval, and then the appeal, and it's like, just save the paper and just approve it the first time.
Right.
It's an ongoing. We need it every 6 months. Just put it in our system that we need it. But yeah.
So can we stay on the claims real quick?
Yeah, absolutely.
For car insurance, home, and all that.
Yeah, so we're going. Perfect.
This is where an agent is worth their weight in gold.
Oh, yeah.
First of all, my recommendation, if you have an agent and not a 1-800 number, is please call your agent first before you file a claim. Now, I get it, 3 in the morning and that kind of stuff, and you want to call the 800 number, that's fine. But if you can, talk to your agent first. If he knows what he's doing, if he understands the company that he's representing for you, he'll know or she'll know all the unintended consequences. They can help you save things the right way, word things the right way. It all matters. We'll never tell you to lie, but I will tell you, you want to say it this way or you want to say it that way. Perfect example, if you get rear-ended, they're going to want to know, were you moving or not? So I'm going to ask you, were you moving or not? If you were stopped, make sure you tell the insurance company that, because they're going to take a recorded statement. You have to say it the right way, or you might not get the full coverage that you're allowed to have. I'll give a real quick story. I had a client who had water back up into his basement. This is in Illinois. It was in 2017. There was a massive flood. And 3 o'clock in the morning, he calls the claims number. And mind you, those 800 claims people, their only job is they have to file the claim as soon as you call, and they have to say everything you said. And so he called, and he's like, yeah, there's 5 feet of water in my basement, and it's so bad it's coming through the windows now. And so the person documented all this, and the next morning the claims rep called him like 5 in the morning. Kudos to that claims rep to be on top of it, but he denied it. And so he calls me, and he's like, Joe, you told me to get this coverage. I don't understand. Why am I getting denied? I said, well, let's talk about it. And he goes, well, and he tells me the same story. Water's coming through the windows. I'm like, whoa. Where did this start? He goes, well, it was coming through the toilet and the drain in the basement. All right, stop. That's all I need to hear. That is a covered loss. Water coming through your window is a completely different policy. It's called a flood policy. Your home policy has sewer and drain on it. It's covered. Let me make a call. I called the adjuster. I said, hey, it started here. He goes, oh, okay, we can cover it. $27,000 later. Whew. Now, if he called an 800 number, didn't have a dedicated agent, I don't know that he's getting that same information and going to have that covered.
Wow.
So,
That's crazy.
My office had 4 feet of water in the basement while we did this too, but my wife's like, oh, you're going to have to close. Like, nope, today's going to be the busiest day. So we stayed open with the water in the basement.
Wow. Yeah, that kind of goes back to the story of that my client who got into the car accident. The first thing they did was call their agent.
Yep.
And told the agent everything. And
that's what
the
you
agent
should do.
told them what pictures to take, what to tell if to call the cops, because here in certain types of accidents, the cops won't come, or they take
right, or if it's private property or whatever. Yeah.
So what to say, what to do, and that part of that subjugation coverage. Yeah, they ended up. They had so much evidence proving.
Yep.
Even though initially it was like, it's more their fault than the other guy's fault. Once they get all the coverage done and they go through the pictures of everything that was done, I was like, I think we're not going to win this one, so let's just move on. Yeah,
it's important. And if anyone's ever been in an accident, most of us have, you're not thinking straight in the moment. Your adrenaline's running. You're in a totally different state. So you're not calm and rational. So it's always great to talk to someone who's going to be calm and rational and tell you to take the pictures, get the police report, get the other driver's insurance information, and then just as important, like what to say when you talk to the underwriter or what have you. The other thing too is just because someone gets a ticket doesn't mean they're fully at fault. The ticket and what the insurance company considers at fault could be totally different. So just keep that in mind as well.
So I want to get into a couple of things here with these risk plans and budgeting review stuff that we kind of talk about with some of the clients. Is under. Let me try that again, folks. That tongue tied there. Underinsured auto liability. Most people have the state minimum. We talked about this a little bit earlier, but lawsuits for severe injuries could exceed $250,000, $500,000 and up.
Easy, yeah.
Yeah, so you want to make sure that you have the proper coverage there. And it might cost you more per month, but again, that peace of mind of...
Yeah, I mean, the dollar amount is very small relative to the coverage you're getting. So just again, back to that peace of mind. An uninsured, so we talked about liability earlier. If I'm at fault in an accident, making sure to take care of the other parties so that they don't come after me personally. Mm-hmm. Well, the uninsured, underinsured on your policy actually protects you. So if Joey rear ends me and has no insurance, or he has what everybody else has is a real limited amount, my insurance will kick in and help cover above and beyond. And so even if other people have bad insurance, you should have good, better liability limits so that you make sure you're taken care of if something happens. And it works like it works in a lot of ways. Like, people don't know. I've had so many situations where I've helped people with claims. I've had someone, get hit by a car while they were a pedestrian.
Wow.
By the way, your auto insurance can cover that.
It's good to know.
No one knows that. That's your tidbit for the day.
Put that in the comments. That means you were watching this far along.
There you go. I like it.
Point. Homeowner deductibles, they don't understand. Some people unknowingly choose 2% deductibles. On a $400,000 home, that's an $8,000 deductible.
Yep.
Wow.
So there's a couple of things that we now live in a world where it's really hard to get away from percentage deductibles. They were optional for a long time. Nowadays, for wind and hail, a lot of companies, and so what wind and hail means is if your home is damaged either with hail or a result of wind, so a tornado, a tree, wind blows your shingles off, they're now requiring a higher deductible. And that's usually where you see the percentage deductible. Yeah, 1%, 2% doesn't sound like a lot until you know it's based on your dwelling. So if, like, to your point, $400,000 home, 2% deductible, that's an $8,000 deductible. And it doesn't always say $8,000. It just says 2%. So, yeah, you want to be aware of that. Because unfortunately, we live in a world where everyone's looking at the bottom of the paper and that price. There's not a single insurance policy that's exactly the same, so you have to understand what you're getting. You can't just base it off price.
It's like getting when you have if you have collision or comprehensive deductible on your car, and it's a $1,200. You have $1,000 deductible and it's $1,200 in damage, and you pay the $1,000.
Yep.
You're like, oh, it's $1,200. No, you're still paying $1,000. The insurance is paying the other $200, but you still have to pay.
And this is why you have to talk to your agent, because that happens a lot. They're like, oh, we're covered. I'm just going to call and file a claim. Well, that's the other issue. Is people are like, oh, I'll just file a claim, and if it's not covered, they'll just take it off. Another dirty secret for you guys, especially on home insurance. Roofers knock on your door and say, oh, we're going to get you a new roof. We're going to do this and blah, blah, blah. So you go, oh, yeah, I'll file a claim. What? No big deal. Well, first of all, if you do a couple of those, there's some insurance companies that are notorious for dropping you. Even if none of those claims pay out, you file them and they go, oh, you've had 2 claims in a year, we're going to drop you. And every other insurance company is going to charge you as if those were real claims. You do not ever want to file a claim unless you know it's going to pay out. And the only way to know that is to talk to your agent and have him help you through the process. A lot of times roofs come up a lot over the years. I have roofing experts that I have come out and say, is there a real claim here? And they'll say, yeah, there is, or there isn't, and then we can make better decisions. I go back to that unintended consequences. I want to keep things as simple and easy for my clients as possible. I don't want any more hardships, because if you have a hardship, I'm having a hardship. So,
right. Well, that roof situation reminds me of somebody I knew with their car. They would file claims for the windshield cracks to get it replaced by that. Safe Life Repair, Safe Life Replace, people. I was going to sing it, and I ended up doing it anyway.
I think you should have.
I know. But they would file the claim, and there were people sometimes in the parking lot, hey, you got a chip, I'll take it out, we'll do it, and they file an insurance claim. Well, he got his car insurance dropped.
Wow.
And then couldn't find another carrier because he had too many claims.
Yep.
Then we had to find a discount carrier, and it was more expensive, and it was less coverage, it was a fiasco. But just because they had so many of these little claims for these little chips in the glass. And
I got a call during COVID, and she was a psychologist. So you'd think someone who's emotionally, calm and all these things. And she called me. I'd never met her in my life. She wasn't my client, but she called like devastated and upset. Long story short, she had insurance with a really well-known insurance company, really reputable, millions of commercials. You all would know who I'm talking about. And they dropped her. And the reason they dropped her was COVID, and she called the agency, and the agency said, oh, we're closed, do it online. They had damage to the side of their home, and they had damage on the roof. Wow. So they filed a claim for the roof, and they're, oh, wait, we have siding too. Let's file another claim. So the insurance company took it as 2 claims, like, oh, no, that's too many claims, we're going to drop you. And she couldn't find anyone to take her, and she was freaking out, and, I had some options for her, so it all worked out. But that goes back to that point. Just don't file claims without talking to your agent. By the way, during COVID, we didn't miss a single day of work.
Wow.
So phones were answered. We took care of everybody.
Another policy people don't talk about, but is a good policy to have as far as your financial protection goes, is an umbrella policy. It's typically for like $150 to $300 a year. You can get $1 million in coverage. Now, the thing about umbrella policies, you hear $1 million in coverage. I'm covered up to $1 million. Well, everything under the umbrella, the car insurance, the homeowners insurance, it has to be up to a certain minimum. So if you're at a minimum of car insurance that we talked about earlier, that 25, 50, 25, to be considered an umbrella policy, you got to up those claims, all have to be upped.
Typically, some companies will do 100, 300, so 100,000 per person, 300,000 per accident. So other companies will do 250,000 per person, 500,000 per accident, and that actually is where I recommend most people to be is at that 250,000, 500,000. And if you can't do that, bare minimum, I actually recommend 100, 300. But yeah, to your point, that liability has to pay out first, and then the umbrella goes above and beyond that.
Now, the last thing I want to cover here in these hidden gaps that devastate families is most people, they're working at a job, they're covered. They have insurance. We have life insurance. We're covered. Yay. But people don't realize that most of that is basically one extra salary. So, yeah, your family's covered for a year's salary if you happen to die.
Not going to pay the mortgage.
Not going to pay anything. And when you decide you no longer want to work there, you no longer have coverage.
Right. And there's no guarantee your next company is gonna have it.
Yeah.
And then since the insurance company is helping you subsidizing that, they can change it from year to year.
Yeah.
And then a lot of times it goes up every year based on your age. So you could actually, if you do it young enough, you can get a term policy for less than the coverage you're getting on the group life. And real quick, another thing on that, unfortunately, I don't want to get into who it is, but someone close to me, not like direct family, but she just found out today her husband has cancer. Oh. And yeah, it's been one of those days. But anyways, so he's going to probably miss some work, and there could be a point where he can't work anymore. Well, guess what? There's a good chance that group life insurance isn't going to be there if the worst case scenario happens. So you got to have life insurance on your own. Thankfully, they do have life insurance to at least pay off the mortgage. When we do, I know you do too, Joey, is when you do a plan for someone, you look at the biggest expenses and you want to make sure to at least cover that.
Yeah.
So if the worst case scenario happens, at least the two kids and the wife can stay in the home. That's your largest expense for the majority of Americans. At least let's get rid of that. And then, kind of go from there. So, and then the other general recommendation is usually just to keep it simple. A lot of people will say do 10 times your salary. So if you're trying to figure out how much and you don't want to talk to anyone, do at least 10 times your salary.
Yeah, the math on that is kind of, it's 10 times your salary, meaning if you get $100,000, you get $1 million coverage. What'll basically happen is if you invest it wisely in good growth stock mutual funds in the market, which have a history of growing at least 10 to 12% over the life of the market, not necessarily the last year or two, whatever, but over the life of the market, essentially what you're going to be doing is pulling out the interest every year, living off of that. That's the income replacement option that you're using life insurance for, and the bulk amount is just staying in there generating your income replacement, which is one of the tools why you have life insurance, is either income replacement as a estate planning tool to pay down debt and things like that, or as a inheritance tool.
Yep. And life insurance is the only thing I know that actually pays out what it says it's going to pay out. If I have a $100,000 salary, I'm not getting $100,000. I'm paying a lot of that to taxes and everything else. If I win the lottery tomorrow, they're not giving me $1 million. They're going to give me half of that or whatever. Life insurance will actually, if you have $1 million life policy, it will literally pay all of that $1 million. As long as you don't have loans or whatever against it, but there's no taxes on it. It's a really amazing tool, and not enough people use it because they're not required to. Everyone has home and auto insurance because they're required to, but life insurance is just as important.
Now, I wanted to walk through a few of the life stages for people in insurance. We're running towards the top of the hour, so I'm going to be a little quick on these because I have some questions I want to get to.
Yeah, sorry, I talk a lot.
No, we're good. I think we're going to do, guys, if you're listening live on the radio right now, the show's going to end, obviously, at the top of the hour. We're going to be still on live on YouTube. So hop on over to the YouTube channel at www.youtube.com/@theprosperitylounge. We'll hang out for a few extra minutes, answer some questions that are coming in from the chat, and get to some of these other topics. But briefly here, we kind of covered a little bit. Young adults needing renter's insurance, possibly, basic auto, starter term policy. Newlyweds, you talked to, again, young families, 10 to 12 times their income and life coverage.
Yep.
Higher liabilities that start coming up, and then income protection tools. When you have a home, look at things like replacement costs, proper dwelling limits, and umbrella coverage. Retirees, we didn't get into them, but long-term care, final expense coverage, asset protection
Yep.
strategies.
And hopefully you got a permanent life policy early
Yeah.
on in life, so you've got that there. Real quick, back to the home and the renters, because we didn't really touch on it, is the liability is really important. Everyone thinks liability is only if at your house someone slips and falls. It actually covers you anywhere in the world. So if anyone sues you, you can literally go to your insurance company and they'll legally represent you and pay out up to that liability amount. I had a guy who was at a country club, fell into a fire pit and accidentally took somebody with him.
Wow.
A year later, the guy got sued, and there was a judgment on him, and the insurance company, paid out $400,000. The country club paid out another $400,000 companies to take care of this guy's injuries and pain and suffering and all that.
Wow.
So,
And one of the categories that gets often overlooked, and we'll probably talk about this on the after show, so stay tuned for that, business owner coverage, the liability,
just as
workers'
important.
comp,
Yep.
key person policies, buy-sell agreements, those are all. So if you're a
Extremely
small
important.
business owner, hang out after the top of the hour, some bonus content. So, Joe, one of the fun things we get when I put out episodes is I get questions that come in from the audience, questions that come in from the chat, questions that come in from all over the place. So I got one or two here for you, and then we're going to get to our rapid fire round of questions.
excited.
All right. Jenna from YouTube asked, how often should someone shop their insurance?
Hi, Jenna. Well, you should review it with your current agent at least once a year. If nothing changed, maybe just do a quick glance over. Shopping is good, but be careful because, again, not every policy is the same. So every time you change, you're maybe creating unintentionally a gap of insurance. So definitely shop because rates do fluctuate, but just be mindful that they're not all the same. Even if they look the same on the piece of paper, they're not always the same.
Chris in Sevierville asked, do I need life insurance if I don't have kids?
I'd highly recommend it. I mean, I don't know what your lifelong goals are, but don't forget, life insurance will never be less expensive than right now, unless, of course, you have some illness that you get over or whatever. But in general, it's never going to be less expensive than now. And if you're young enough, you can make a ton of money off of it, create an emergency fund, help your retirement. There's so many great things that can happen. Life insurance at any age. In fact, if you're 15 days old, I'd say get life insurance. Not because you're going to pass away, but because I want to start building your equity now, so that when you're my age, you're going to have a nice chunk of change there.
I would say, too, add on to that, a very minimum amount for final expense coverage, so the people you're leaving behind don't have to foot the bill.
Yeah, and I would be at least 10 to 15 grand for that.
Yeah, for sure. Sarah from Knoxville asked, should I drop full coverage on my older car?
That is a preference. So it depends on the vehicle, depends on the value of the vehicle, how comfortable you are. Like, say the car's worth $5,000. Well, if you told it tomorrow, are you comfortable going out and buying a car on your own with no financial assistance? If that's the case and it saves you enough, absolutely. If it's, if full coverage is only a few bucks more and you're going to get $8 grand out of it, I'd maybe hold on to it. It's a personal preference and great conversation to have with your agent.
Perfect. Now, this gets into one of our newer segments. We do this on the Wednesday show for everybody. Everybody there gets the same set of 10 questions, but here on Friday we mix
He
it up
didn't
a little
prepare
bit.
me for this, for the record.
No, this is off the cuff. This is a rapid fire. You got to think what's in your head. So on Fridays we do a kind of theme towards your wheelhouse here. So these are all insurance based rapid fire questions.
All right. Could have been football too, but that's how insurance works.
No, I don't know. There might be one in here. All right. First words that come to your head. First thoughts. Term or whole? Which one do you recommend more often?
Oh, that's tough. I know we got to be quick. Whole. Permanent. No,
Okay.
Actually permanent.
Most underrated insurance policy.
I'd have to go with life insurance.
One word that describes a great insurance agent.
Caring.
Love that. Biggest myth about insurance.
That agents get 50% of the commission. I see commercial. I see that on YouTube all the time. It's a total lie. We get very little commission, but that's okay.
Most common mistake while filing a claim.
Thinking there's no consequences to filing a claim.
Independent or captive agent preference.
Hybrid.
Oh, got a couple seconds.
Benefits
Explain.
of both. So captive agent has better access to the insurance company, a bunch of knowledge. Independent's great because you have a lot of things you can shop and price. I'm a hybrid agent. I have both, and I feel like that's the best place. Obviously, I'm being biased, and that's a new thing that's just starting to become a thing.
Okay. Most understood insurance term.
Most understood or misunderstood?
Misunderstood. I didn't even read my own writing.
I would go with liability.
One upgrade every household should consider.
To their home, to their policy, or their home?
Just in general.
I'm going to go with the insurance, water backup.
Water backup, okay. First policy people should review annually.
Well, if they're homeowner, home insurance, otherwise their car insurance.
Finish this sentence. Insurance gives you.
Peace of mind.
Got 2 bonus questions for you. What is your personal definition of prosperity?
Success, freedom, being able to live out your goals, your dreams in life.
And one final bonus question. Bears make the playoffs?
Dang it. I knew you were going to go that route. I'm worried about this week.
Okay.
And so for those who don't know, I'm a diehard Bears fan. We have to dislike, I won't use the word hate, but we have to dislike the Packers. And they've had our number for quite a long time. I'll just put it out there, yes, we're making the playoffs, and we'll beat the Packers this weekend. Behind closed doors, I might tell you something different. Since we're out in public, I'm going to stick with it.
Can I get your best? The Bears.
The Bears.
I love it. Going to have some sausages later from Schwarzkie's.
There you go.
Maybe get a suit for Dicka.
There you go. Should we end the radio station with good, better, best?
Oh, I love that. Well, this has been an incredible conversation. And before we close, where can people reach you for policy review or consultation? What's your best contact?
Yeah, so we got a couple phone numbers you can reach us at. The one that you can text us as well as call us would be the 847-223-4747. We also have the 865 number. And then email Lapera, Lapera, at farmersagent.com. And then we're on Facebook. Just look us up, Lapera Insurance Agency. You'll find us out there.
Perfect. Just pop the QR code back on the screen for people to scan. Take it right to your website. Phone number there as well.
And my team and I are happy to help.
Sweet. Remember to mention that code JR Radio for some special gift cards if you're the first 10 people. It's early in the month still. Get over there.
Oh, plenty of time.
All right. So, friends, insurance is not a bill. It's protection. It's stewardship. It's peace. When you understand your coverage, you protect your family, your finances, and your future. Join us at theprosperitylounge.com. Join the free community and subscribe to our YouTube channel so you don't miss out on our Wednesday premieres as well as our Friday live stream. Wednesday, we were in the chat having some fun as well, talking to our guests and then having a great time. Sometimes we go live after and just continue the party. It's a great time. So until next time, everybody, stay faithful, stay fearless, and remember, freedom lives where faith and action meet. The lounge is always open, and so is your next breakthrough. This is the Prosperity Lounge.
Pull up a chair. The journey's